Hey guys, Wave 618 here. It's the 10th of December 2018, just approaching 5 p.m. GMT. Okay, so I thought we'd do an update on Bitcoin today. Alright, we're long due. It's been a while since my last video, probably around a week I think, so not ideal, but yeah, definitely due a video because we've reached this 3200 mark, which I had been predicting, and since then we've not really seen any major impulsive wave off that 3200 level, so we're going to zoom in shortly, looking at what price is doing right now and try and make sense of what's happening. Are we just correcting? Are we going to come down further? Could this still hold? So that's what we'll be discussing soon in this video. But first of all, a few little changes to how I've annotated my chart. So you can see a color change for these order blocks. So what I'm going to start doing now is for weekly order blocks or above, I'm going to use a black box. For the daily order blocks, which these were both found on the daily chart, so they're going to be colored in red. 4 hourly is going to be blue, and hourly and less is going to be green. So that's just so you know what you can expect from my order blocks, just so you can know what time frame I've drawn them on. And it helps you understand the significance of the order block. If it's on a higher time frame, it carries more significance. Alright, so those of you who are new to my channel, first of all, I've been showing this WXY for some time now. This is W. I see this definitely as a 3-wave move down. Other people have counted 5 waves. I don't really see that. If this is a 1, 2, if that's 3, then 4 looks like it's overlap 1, so I don't like the look of that. I would definitely call this 3 waves down, hence why I've called it a W. X is this descending triangle, A, B, C, D, E, and then since then we've got 3 legs down. This is our first leg, then we've got what looks like a triangle forming our second leg, before we've then come down to make our final leg, which I had predicted would come down to 3200, with wave Y being a 0.382 extension of wave W. So right there you can see at 3200 we've hit that 0.382 level. Okay, and that said, we can draw a pitchfork from our first 2 waves. So first pivot, second pivot, third pivot, we draw our pitchfork. This is our shift pitchfork. We've tested our median line twice and actually slightly breached it here, but that's not of any real concern because pitchforks I always use as guidelines rather than buy and sell signals. Okay, so that was the reason I was calling 3200, and the order block was drawn on this daily time frame, where you can see that the daily close here was at this level, 3200. It was a significant close prior to this massive move up, so a very, very important level. And if it doesn't hold, there are a few other levels of support which we can further discuss in this video, but we're just going to focus on this 3200 level for the time being. Now let's zoom in now, shall we, just so we can have a better look at what's going on. So 15-minute chart is probably the best one to have a look at. Here you can see a few green order blocks. As I say, 15-minute anything less than 1 hour where I've identified an order block will be colored green. So you can see a green order block here capturing this block here which preceded this move up, and then again a green order block here which preceded this move up and has now acted as some short-term support at least. Okay, now let's just remove everything off the chart a moment. So this is where we hit around our 3200 level, and from there was a clear bounce, looked pretty impulsive, and then this obviously very corrective, but then since then we've had what looks like 3 legs up, so certainly doesn't look impulsive at all. So that obviously causes some concern if this is going to be the bottom, because so far it looks like we've had just one potentially impulsive move up followed by a correction, and then unfortunately that's been followed by what looks like a correction in itself. Now the only way from an Elliott Wave perspective that I can see this now being really impulsive is if this is our impulse and this has all been a correction. So again, if we bring on our Elliott Wave, so this could potentially be a running flat, with this being A, B and C. That said, C could even come down a bit further. If this was the end of C, then it means that C is actually a 0.786 extension of wave A. So if we just show that here, you can see we've hit that 0.786 level, and you can see once on the completion of that, there was a big spike in volume that came in. You can see this spike here. So someone is clearly trying to defend this level, and I believe it's the people that are trying to defend 3200. This is really a last ditch effort to try and defend 3200 being the bottom, because it's the only real count that I can see that would, from an Elliott Wave perspective at least, that would call for 3200 being the bottom, because I can only really see this all being a corrective pattern as a whole if this is still going to go up. So yeah, and as I say, there was this order block here on the 15-minute time frame, and there was good support. We shot up, and then it's not really gone up much further than there, so we've still got to see what happens with this level. It's very significant, this order block, and whether we may come down a bit further where C may be a one-to-one relationship with wave A, so that's possible also. But yeah, we're gonna have to wait and see. As I say, I've been giving this 3200 level every chance of being the bottom, just because I've seen it from quite far off. It's been a long time now that I've been looking for this 3200 level. But that said, I don't just trade blindly when a target gets hit. I do wait for an impulse and then a corrective pattern, and then, for example, here would be a reasonable place to get in, but now it's kind of all messed up. And you would have seen on my last tweet, I was saying I'm waiting for significant levels to get breached before I would start looking for any long positions. So for example, if we go on the daily time frame, so one significant level I would want to see breached really if I was going to go long, I'd certainly want to see this daily order block get breached, and then a retest of that. That would be one option to go long. And then if you were to trade the shorter time frames, for example, there's this order block here, which represents this data here. So if we broke to the upside of that and retested, then that's a good long, probably to the top of this daily order block here at 4100. But that's what I'll be looking for. So far these order blocks have acted, let's just get rid of that one. So this has acted as really good resistance so far, so we really had difficulty getting up there. So far this is looking more corrective, to be honest. So that looks like, it looks like a three-legged correction really, a bit of a zigzag type pattern. So we'll have to see what happens. We'll soon find out. This is, I mean, the 15-minute chart, so it won't be too long to wait before we find out what's going to happen. But as I say, because 3200 was a significant level for me, I'm looking closely at the charts now to determine whether this is going to turn impulsive or not. This was interesting to see a lot of volume come in here, but that said, it's not gone too far, so that doesn't mean too much. So yeah, closely watching this, waiting really for this level to break for a potential very short term, probably an intraday trade to go long before, with a target of around 4100, and certainly if we break 4100 and retest that, then there's a longer term long to be had. But yeah, if this 3200 gets breached, then we can then look out for the next levels of support. So if we go on our daily time frame, we can clearly see the next level of support will be at this high here, which was retested. So that's around our 3000 level. So if we just put a horizontal line there, so this is a resistance support flip here, so it is clearly a significant level. Now I did say in previous videos that 3200 for me was significant, but we could potentially see, for example, on a weekly candle, we might get a wick down and a close, a weekly close at the 3200. That's just because a significant level has been hit, it doesn't mean it has to be respected entirely. It's more the closing candle. For example, a weekly close or a monthly close at 3200 would still mean that 3200 level was significant, but you could in fact see a wick come down even lower than 3000 in fact. And 3200 could still be significant if the weekly and monthly close were at that level. So that's another thing that can happen. That's why I say I don't just get in at the bottom just because a target's been hit, because very often you can see a wick that breaches that level and will take out all of your stops. I look for a clear sign of support if in a downtrend, and so far we've not seen that. We've not seen any real impulse move up from the bottom, so I'm still waiting to look for that. We have seen obviously a bit of volume come in, but obviously that's nothing in contrast to this volume here on this spike. That said, let's just have a look at what happened in 2014. We saw, for example, here this spike was higher than the actual spike at the bottom. Yeah, the volume spike here. So, but the thing is, this was accumulation here. So actually you meant to combine all of this volume together, including this here, and that's what the volume that makes up this bottom here. So it is actually quite a large amount of volume that came in, and so a similar thing can happen here. It could go sideways for some time with reasonable volume, and overall that could be an accumulative large amount of volume, enough to then cause a big impulse up from this correction. Okay, so monitoring this closely, I think we've discussed the significant levels that I'm looking out for. So as I say, next level of support is 3000. The next one after that would be so if we go on our weekly chart, there's a clear weekly order block. So here, the red candle that precedes this massive move up is our weekly order block. So if we just draw our block here, so as I say, a black box will be used for weekly timeframes and above for our order blocks. So that's a very significant block there. If we just click on the box, we can see the levels of the box. So 2500 is the top of the box and 1900 is the bottom. Okay. Now, if we just apply a fib retracement, let's just take off volume a moment. Okay, and so a fib retracement from the low all the way to the top. So 4300 was our 0.786, which a long time ago we were looking at that as a potential target. But the next one is around 2400 or 2386, that 88.6% fib retracement, and that is just below the top of our order block. So certainly this region, 2400 to 2500, there is reasonable support there, with the next support being at 1900. Okay, now yes, these levels can get hit, but obviously the pitchfork, what I like about pitchforks, it tells you if price is being a bit overstretched or not. Now certainly we're at the median line, which means certainly we can test this lower median line, even the lower warning line, but this is a really very overstretched, oversold level when it reaches the lower warning line. Could it happen? Yes, potentially, or we could just go sideways from here. And using pitchforks, the time that we can only really confirm that the downtrend is over, because that's what pitchforks are used. They're used to confirm the trend. You can see that the price is clearly bouncing off these lines here, respecting the median line here. And it's only when the upper warning line in a downtrend, the upper warning line needs to get breached, that's when we can say that the downtrend is over. For example, we could see a bounce here. It may come up, test our warning line, and just come back straight back down, make a new low. That's another way in which it can play out. So until really this warning line here has been breached, it's not until that point that you can really say that the downtrend is over. Okay, so what we've discussed so far, so we've discussed further levels of support should 3200 break, so 3000 around 2500 is the top of this order block. I've explained on the shorter time frame, the 15-minute chart, what I'm looking out for. As I say, nothing really very impulsive so far, so certainly not something, I'm not involved in any trade at the moment and wouldn't advise you to either. But obviously it's up to you to make your own decisions, but yeah, certainly it's not until we see something very impulsive and then something I can trade the correction of. You know, I'm not too interested in the longs, but I am focusing on this very closely right now, just because 3200 was a significant level in my eyes. Yeah, so that's the 15-minute time frame. So that's what I'm looking at right now. Now, it is always important to consider other markets, so we can't forget, for example, the equities. So if we just pull up the Nasdaq here. Now, looking at the Nasdaq, if we zoom out, let's go on our weekly time frame. So I've counted what I see as 5 waves up here on the Nasdaq, and so what I see is this being we're on the log chart, so these corrections look very minimal, but if that's our wave 1, and then I've said this is a running flat A, so A, B, C, and if we do a fib extension, you can see wave 3 came up to here as a 2.618 extension. We'll just get rid of that one now, and then our wave 5 is a 1-to-1 relationship with waves from the genesis all the way to wave 3. If wave 4 came down to here, see we've got that 1-to-1 relationship, which could potentially be the end of wave 5. Now, the limitations with Fibonacci and Elliott Wave is that you don't know how extended, you know, which fib level we're going to go to. Is it going to be just a 1-to-1 extension of wave 0 to 3, or is it going to go to the 1.618? So there's lots of levels that are reasonable to take into account. But that said, we are in the 10th year of an expansion phase of the economic cycle, so we are waiting for a recession, really. If we look at this pitchfork drawn from our first 3 pivots, that's first pivot, second pivot, third pivot, you can see these lines have been pretty much followed quite nicely here, defended here at the lower warning line, and right now, if we go on our daily time frame, you can see that we're actually testing, we're getting pretty close to the lower warning line once again. I've drawn some order blocks on here, so this one is our weekly order block. So you can see here this red candle that precedes this eventual trend upwards, and you can see the bottom of the order block held really nicely here, and it bounced up all the way up to our lower median line, but then it's bounced right back down. That said, we can also just have a look at our moving averages. So on our daily time frame, if we look at this simple moving average of for example, the 200 period moving average has acted as resistance so far. So failed really to significantly close above here. Just very briefly for probably 1 or 2 days it was above the 200, came back down, then retest it, had a lot less joy this time in getting above the 200-day moving average, and didn't actually manage to close above it, and it's come right back down. Now again finding a bit of support at this weekly order block, but also on this daily order block here. So if we zoom in on that one, you can see this accumulation here that preceded this move up is just about acting as support here. So this is very key, this red order block here. If this fails to hold, then this could easily fall down even further. So we're at a very significant level with the Nasdaq here, because if this lower warning line breaks, that's really suggesting that the uptrend is really being questioned here, and we could be going into a long-term downtrend. Now, if that happens, we could easily go into recession. As I say, we've already seen a very extended expansion phase of this economic cycle, and if we do go into recession, it's going to make it very hard for other asset classes to do well. In particular, well, there'll be a general, risk-averse strategy by the majority of traders. So cryptocurrencies as well, I would expect to be affected. So yeah, if we do see, for example, is going into a recession, and this, for example, this low warning line getting breached, these lows getting taken out, then that would be quite concerning from a cryptocurrency point of view. It would be difficult for the cryptocurrencies to do well if all of a sudden we go into a recession. So it'd be in the interest of crypto if we do see a bounce off this level, off this order block, for example, or even the lower warning line. So as well as the Bitcoin chart, I'm closely monitoring this as well. What else can we quickly discuss? So we can just mention Ethereum. I had mentioned that I was looking at $84 to get hit. So that hit on so it's on the 4-hourly time frame that I saw this order block. Sorry, let's take off these moving averages so it's a bit clearer. Put on the log chart. Okay, I might not have color coded this incorrectly. I think that was seen on the weekly time frame, this order block. Yeah, anyway, yeah, so the bottom of this order block here was at around 84, which we saw a nice bounce off right here. And you will have seen that I tweeted this about a week or so, or before it actually went down to hit this 84 level. Now it's acted just like 3200 has acted as good, well, short term at least, support on Bitcoin. The 84 level is acting as at least short term support here on Ethereum. So and here you can see we're testing this lower median line. And again, I've got a WXY count on this with WX and that being Y. So yeah, that's just how I'm looking at it right now. So as I say, I'm not really trading Bitcoin right now. Certainly before I will consider 3200 to be significant, I will need to see some impulsiveness on the Bitcoin chart and breaks of these order blocks to the upside. Okay, so I think I'll wrap it up there. That'll be enough for now, I think, and I'll keep you updated on YouTube, on Twitter, as things progress. Alright guys, take care.